Good afternoon, everyone. Let me see if you can hear me okay. You can see my screen all right. Same drill, let me know. Hey, Kelvin, how are you doing? Fantastic. Thanks, Fabio. Thanks, Desiree. Good to see all of you again. Familiar names. Feels like we never left. Hey, Stephen, how are you doing? Hey, Anne-Marie. Hope you guys have been trading well. Hey, Zoran. Good to be here. Kelvin is not working. I have no idea. I just sent out a couple of ideas there just before I jumped into the webinar now. So maybe do a quick refresh. Try a different browser if you can. I've heard some people have tried different browsers. Download the app. All right. I'll feed back to the tech side and get them to check. I think there's an app out. I have a desktop app, not a phone app. All right. I'll find you and I'll send it to you. All right. So as usual, if you're new here, I do recognize a lot of familiar names, but if you're new here, put it into the chat. Hey, Winston, just as I was about to say, if you're new here, put it into the chat. Let me know where you're joining me from. Hey, even if you're a regular, put it into the chat. Let's get everyone telling, where's everyone from. Hey, Simon, how you doing? Markets have been relatively interesting. Not the easiest at this point, but relatively interesting. Today we are here with the IC Markets webinar, getting through the trading strategy series on the definitive guide to trailing stop loss. Good to see. Oh wow, a lot of Australians here today. Good to see everyone. How are you doing, Data? Hey, Alan. I used to be from Perth, so we've got one from Sydney, Gold Coast. I'm from Perth. Pretty much represented the whole of Australia here. Hey, Stephen. All right, I'll give it a minute or two before we get started. Why did gold go up last Friday despite the non-farm payroll was good? It was a bit of a mixed news, Desiree. So, if we have time after this trailing stop loss, I'll tell you a bit more about gold. And dollar dropped strongly as well on Friday, so quite interesting there. I'll give it a minute and we shall get started. Oh, I just lost my questions. Okay, there we go. Alrighty, I've got everything pretty much set up. Okay, so let's get started again. IC Markets webinar here, trading strategy series, the definitive guide to trading stop loss. Put it into the chat. Do you actually apply a trading stop loss to your trades, or do you actually just apply a fixed stop loss? What do you do? Tell me what you do, and then I'll tell you what I use. Good stuff. So Kelvin does it. Hey, Leandro, how are you doing? Fixed stop by Neil. What about everyone else? Please, 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 at least tell me you have a fixed stop loss. Please don't tell me that you don't use a stop loss, because that'd be the worst answer ever. If someone goes, stop loss, what stop loss? I'll get really, really worried. Hey, Jamilu, how are you doing? Hey, BL. Fixed stop loss. Okay, so almost everyone says fixed. I move my stop loss to lose less on newer entries. Okay, trailing stop. Okay, so as you apply a trailing stop, there are a handful of you who do use a trailing stop. Do you actually apply an automatic trailing stop, or do you actually manually move your stop loss right? Or up or down, manual, auto. Hey, we're getting a very good mixed answers here, so that's good. At least you guys are responding. Super happy about that. Mostly manual, auto. Okay, so a good mix of you guys on an auto. So what I mean by auto, there are well, MT4 has the auto trailing stop where it moves up as price goes up. So that's the auto method. If I'm in front of the computer, I do it manually. If too tired, then auto. Fantastic. That'd be the best way to do it. One of the best ways to do it manually if you're watching, and then auto so that you just go to sleep, leave the trade to run. And the last one, Jamilu says manual. All right. So very good answers, everyone. Thanks for putting it into the chat there. So what I'll be sharing with you is trailing stop losses. The auto method is actually quite relatively straightforward. You just apply it onto MT4, and then as price move up, your stop loss continues up along with it. But if you do it manually, if you're going to do it manually, there are things to consider on where to move your stop loss to, right? I'm guessing that a lot of you would have moved your stop loss manually. Who move your stop loss manually would do it, based on a bit of a distance level, right? As price move up, you just move your stop loss according to it. But I want to give you some mechanical ideas or mechanical rules and ideas to consider when you're moving your stop loss up, right? Levels or indicators or visual points that you could move your stop loss to. All right. Hey Bob, how are you doing? Hope you're well. Okay, so let's get started now. Everyone is here, or almost everyone is here. We could get a lot more people. As usual, before I get started in any webinar, a quick disclaimer: any information contained in this webinar should not be construed as advice and is presented as educational material only. International capital markets has not considered your objectives, financial situation, and needs, and you should consider its appropriateness for your circumstances. The contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. All right, so we're quite safe here. We are talking about stop loss, a bit of very educational slides for today. But if I do jump into the charts and I do look into any possible setups, possible ideas of where I would enter, move my stop loss to, and trade accordingly, please make sure you do your own due diligence. Check your analysis, check your leverage, check your margin before you jump into any trades. All right, agree on that? So with that, let's keep going. Hey Pedro, how are you doing? Good to see your name up here again. I would love it if we can have everyone's video on and then we can see everyone during the webinar. That'd be fantastic. We should work to that, hey. Okay, so a couple of things to get through today. One, I did a brief introduction already about what is a trailing stop loss, the different types of trailing stop losses, and then we'll get through the effectiveness of a trailing stop loss in a breakout, right? You can use your trailing stop loss or stop loss levels, auto or manual, in a swing trade, in a scalping trade. But I realized that through my years of coaching people is that in a breakout scenario, a lot of times traders don't know where to put their stop loss or where to move their stop loss to, because you're so absorbed. You're so absorbed. You're watching the charts. You see the price moving in a high volatility situation because it is breaking out of a level, that you get focused on price rather than moving your stop loss accurately. Okay, so we tell you about the effectiveness of a trailing stop loss in a breakout situation. And as we go through the slides, what I want you to think about is which is the best trailing stop loss to apply. All right, which is the best trailing stop loss to apply? I'll give you a quiz towards the end. Let's see what your answers are going to be. Okay, and again, hey, same drill, same procedure. as I go through the slides, if you have any questions, please feel free, put it into the chat, let me know straight away, because sometimes if you wait for me to take a little break, take a breather, I tend to keep going through through the slides, so you might not get a chance. So put it in straight away. I am checking the questions and answers as it comes up, so I'll be happy to answer your questions almost immediately as it comes up. All right. So there are a couple of new first timers here with us. Welcome again. Introducing your host, myself. All right, I am Jin Dao. Most of you know me, or the regulars know me as Jin. I am one of the investment analysts here at the Everest Fortune Group, award-winning research team. I have previously managed a multi-million-dollar FX fund. So, I've been trading for I always say more than 10 years, but it's really adding up now. If you have any questions about your trading strategy, trading journey, I'll be happy to share with you my experience. Possibly not at this session today. Might have a lot of things to get through, but reach out to me through the VIP rooms, through other sessions. I'll be happy to guide you through your trading journey. Let's get you profitable as well. Okay, so with that, jumping straight into the meaty educational part of it, what is a trailing stop loss? Like I was just telling you before the start, or at the start of this session, a stop loss is the order, right? It's an order you apply to your trade or before you get into a trade, designed to lock in profits, right? Or to limit losses as a trade moves favorably. Okay, well, to lock in profits as it moves favorably, to limit losses if it moves against you. Okay, one thing to remember, to really pay attention to and remember, is that when you can't apply a trailing stop loss to a pending order. Okay, so I think quite a number of you do have trades that you put in a market order, a buy limit or buy order, a buy stop. You can't apply a trailing stop to a pending order. It needs to be a trade that's already running, right? A trade that's already running, you would have your fixed stop loss and take profit level already. Then as it moves in your favor, then you can start applying a trailing stop. And quite often, if you do an automatic trailing stop, right? So let me just bring up that here. If you do an automatic trailing stop here, okay, it moves accordingly. So as price goes up, so I'll show you here, as price goes up, so you might have your entry there, say you were to buy, right? And then you would have your stop loss below there. But as price goes up, your stop loss will keep shifting higher and higher as well. Okay, as it goes up, your stop loss will keep shifting higher. Automatic. Then once it comes down, so they have a stop loss there. Once it comes down, it hits your stop loss in a profit. Even if it continues up, you would have closed out your trade already. Okay, so automatic stop loss, automatic trailing stop loss moves up or moves down when it's in your as price moves in your favor. Okay, again, bear in mind, cannot be done in a pending order, has to be done after a trade is activated and when it's in profit. And then second thing to remember is that very often, I think almost all the time, is that when you apply a trailing stop loss, an automatic trailing stop loss onto MT4, or use MT4 to apply a trailing stop loss, there is a minimum. There's a minimum amount. Okay, I think it's 15 pips if I'm not wrong. Okay, so you cannot have it at a 1 pip level, and you don't really want a trailing stop at a 1 pip level or 10 pips level. It's a little bit too near. You want to give your price a little bit of chance to bounce around a little bit before it comes down and hits your stop loss. So at a minimum, it's at 15 pips. Okay, so that also means that as you buy there, as it goes up, you wouldn't be able to apply a trailing stop loss straight away. Right? You need it to go up before you can start applying a trailing stop, and then it will start moving up. So I wouldn't use this. A trailing stop is not something that you apply straight away. Right? It's not something that you apply straight away because you do need your profits to be running relatively significantly. I wouldn't say significant, but you do need some level of profits before you start considering applying a trailing stop. Then, as much as I've talked about an automatic trailing stop, there is the manual trailing stop as well. Right? The manual trailing stop is where you move your stop loss level. Right? All of you have done that. You move your stop loss level based on mechanical indicators. Okay, so not doesn't move for you. You move it whenever you see something, a mechanical indicator that triggers your idea that you want to protect, or that at some level, if it does break that level or that indicator, it's going to reverse against you. Okay, so how it looks, I mean, we do have a number of different indicators, different methods to apply your trailing stop based on a mechanical indicator. I would like a trailing stop on a non-executed buy order when the price drops and executes. Would that be possible? Let me just think about that again. I would like a trailing stop on a non-executed pending buy order when the price drops, it executes. Would that be possible? Bob, from what I understand, I have actually been reading about that because I do want that. I'm actually looking for that as well. So what we're talking about is that, let's say we have a pending order there to buy, right? Typically what we have is a fixed stop loss and then a fixed take profit level to the top, right? What you're looking for is something that once it triggers, then it would move, once it goes up, for example, if it goes up, then your stop loss would drag up along with it. I haven't found anything with that so far, but I do think that I would check. I think that there are a couple of EAs out there that might have that function, right? Either it will move your stop loss up, or it will move your stop loss towards the break even level or towards a certain level. Okay, so I think that Desmond probably has a EA or trade manager that does that. I'll double check with him on that. Kelvin with the answer there. Thanks for that, Kelvin. Okay. So with that, as Kelvin answers that already, what do you think? What is this mechanical indicator here? Right, this first one here, number one. Got an answer for that? What is the mechanical indicator here? I'll give you a hint. I circled that hint over there. You move your stop loss according to a cross, an X. So it's a crossover, right? An MA crossover. So you move your stop loss according to moving average or to the moving average crossover. Okay, good one, guys and girls. Okay, what's the next one? What's number 2 here? You can move your stop loss according to, what are those dots? PSAR. Fantastic, Zoran. I actually think Zoran has went through this session before already. All right, and then here the answer is there. That's the ATR. I know, I remember that. And then this one, straightforward. That's your support and resistance level. Not sir, support and resistance level, or your fib levels, your Fibonacci levels. And then this one is your chandelier, or your I think that's the chandelier there. Okay, so we're going to show you a couple of mechanical methods that you can apply your trailing stop loss to, and why you actually want to apply that. Okay, so the types of trailing stop losses we just went through very briefly. Here's an example. Let's say that you see price respecting that trend line towards the upside. We've got a nice horizontal support level there already. Now that you see price breaking both the horizontal support level and also that diagonal trend line towards upside, you'll be looking to sell, right? You'll be looking to sell from that point. Let's say that because that's a support level, your stop loss would be maybe at the start above that point, above everything else. Take profit, let's say it's way down there somewhere. Okay, so as price goes down, you would be thinking, hey, how do I maximize on this trade as it moves down, possibly towards a take profit level, but you want to secure your profits, right? You don't want to have your stop loss up there. So I'll put there as a number 1, where your original stop loss was. Obviously, when price moves down, first thing you would do, if you haven't applied an automatic trailing stop loss, you would move this stop loss level here. First thing I would do is move it down towards break even. All right, I'll move it down towards break even, and you can see we're talking about moving your trailing stop loss according to the moving average. Just happens that the moving average coincides with that resistance level, support turn resistance level. So I would have brought that down towards that point. Okay, I'll move my stop loss down. And then as price continues moving down, I would move that stop loss lower. Let's say I'm watching this, let's say this is on a 1 minute time frame. I would move my stop loss lower according to the moving average. Okay, so as it comes down, I would say, okay, now it's found a level there. I will put my stop loss based on that moving average, and then as it drops, once it turns down from that level, I'll put my stop loss according to the moving average. Then what happens is, as you move it lower and lower, it comes back up, it hits your stop loss, it gets triggered, your trade close out. You can use either, typically you'd use the MA20, the 20 moving average, SMA. Okay, so that's where you use a 20, but it also depends, sometimes you want to tweak it a little bit, but I would say 20 MA would be more than sufficient there. Okay, so this is how we would move our stop loss based on the moving average. Every time it turns down from close to the moving average, I'll move my stop loss according to that. This is a somewhat simple way to do it, right? And it also protects you, because once price comes up, it triggers what's going to happen next. You see that it goes all the way up. It saves you from that potential loss of profit, right? So it's not a loss. If you did close out there, your entry was still here, right? You'd still be in profit. This would still be profit to you, but you would have lost all those profit there. Okay, so you want to you might want to use MA, moving average, as one of your methods to apply the trailing stop. But what's a consideration when you use a moving average? What's a consideration when moving average comes into the picture? Moving average is typically known to be, let's see who's going to be the first one to answer. Moving average is typically known to be lagging. Fantastic, Zabar. Good one, Bob and Desiree. Right. So moving average tends to be a little bit laggy. So you do give away that much of profits, because it does need to come up, hit your moving average before it gets closed out. So I know some of you might be thinking about that and go, wait, that's still not good enough. What else can we do to remove or reduce that loss there? Right? What else can we do to reduce that loss there? Moving average is very similar to the trend line, right? So you can have a trend line as well, finding that top there. So another example, on the top there, tops there. Then once it comes down, hits your trend line. So you move your stop loss according to trend line. Once it hits, you're closed out, right? So you move your stop loss accordingly. The next one is the PSAR. Okay, so the PSAR, as much as based on this example, it shows you that you'd have closed out there. Okay, I can tell you that the PSR could actually get you quite a lot closer and reducing that loss. Okay, why so? Is because remember that the PSAR is a bit of a live indicator. It's a bit of a live indicator. What I mean by that is these dots appear as price moves, right? These dots appear as price move. So at some point, that PSAR would have been a lot lower, right? Could have been lower at about that point there. Oh no, about that point there, right? So as price goes up and hits, then it appears towards the downside. Okay, so you could have reduced a little bit to the down on your stop loss level there. Okay, but since I have a relatively clean chart here, one thing you also want to consider is moving your stop loss based on levels. Okay, relatively straightforward based on levels. You can see that if we just drew this level right across, not a very straight line. Let me see if I can do a straight line here. Nope, drew a level straight across and then drew a level straight across. That would also, you could also move your stop loss based on horizontal levels, right? You can move your stop loss based on horizontal levels. Every time it breaks a level, you move your stop loss down. Every time it breaks your level, you move your stop loss down again. Okay, would you re-enter the trade and sell down again? It's really up to you. I would say that if this was a 15 minute time frame kind of trade, then possibly you would want to get out, secure your profits, get in again. But if this was a H1 time frame kind of trade, or you can see that this is a very long term, since we're from Feb to March, so this is a long term kind of trade, then you might not be able to get in or monitor the trade all the time to get in and out at the right time. Okay, so you want to shorter time frame, you could re-enter and sell down again. Longer time frame, I think it'd be better to manage that stop loss just so that you can ride that whole trend towards the downside or towards upside. Okay, all good so far? All good so far? Fantastic. Thanks, Kelvin. Thanks, Bob. And then one more is the chandelier and the ATR. Okay, so we have the ATR there, also providing that dynamic, a little bit of a dynamic movements. It just gives you the average trading range. So it moves according to as price moves. So this also helps you reduce at some level the potential loss of profit. Hey, James Bond. Yes, this is recorded, so the replay will be available. Check out if I'm not wrong, check out the YouTube channel, but I think it will be uploaded slightly later. All right. So what was I saying? Chandelier ATR does reduce. You can see that if I scroll up quickly, this one's close out quite late. This one's close out quite late there. We get earlier as we look into the parabolic SDR. We get earlier, even earlier as we, you guys, as we get into the chandelier and the ATR trailing stop loss. Yeah, now I can say that I've taught James Bond how to use a trailing stop loss. Hey, Pedro, catch you again, no worries. Okay, trade well, trade safe, Pedro. Okay, so these are the few. These are not limited. So you're not limited to the moving average, the PSAR, the chandelier ATR, or the trend lines as a method to identify your stop loss. You're not limited to these, but these are just a couple that I've picked up just to show you guys what you can use to apply your trailing stop loss to. Okay, because if not, what's going to happen is that I'll clear this out again. Right, what's going to happen is that you get a little bit unsure. You might get a little bit unsure on where to apply your stop loss to. So what happens is that as it drops, naturally you'll be a bit fearful, right? So as it comes down, you might have your stop loss first up there, then securing a little bit of profit. Then as it drops, you might apply a trailing stop too near. It hits, gets you out before going down again, right? If it comes down, you apply your trailing stop a little bit too near, it hits, gets you out, closes you out, and goes back down again. So there's a little bit of the cons to applying a trailing stop. If you don't apply it properly or give your trade enough space to move, right? What happens is that you end up closing, or your trade ends up being closed earlier just based on price volatility, right? You don't want your trade to close out based on price volatility. You want your trade to close out when there is a change, right? As much as possible, a change in the trend. Then you see that it was a good idea that you had your trailing stop to close out your trade. Are there EAs that move the trailing stop according to the indicator, like ATR, chandelier, and so? I don't. Let me see if let me think about it. If I have came across that, I don't think I have come across that. An EA moving stop loss according to those indicators. But then again, we are telling you about this because I'm using this as a mechanical method to apply the trailing stop. So I do move my stop loss lower and lower as either the indicators. For me, I use the support level. Yeah, I know. The support level, support and resistance levels as my triggers to apply that stop loss, or to drag my stop loss level down to. I'm pretty sure the chandelier is on the MT4. I'm pretty sure. Might have to download it from a third party, but I think it should be there. The very first time we apply the trailing stop, how far away do we need to be in profit before we move to break even? I tend to get whipped out. Example, we ensure that we're 1 to 1 in profit, or 1 to 2 in profit, then move to break even. Okay, Desiree, I don't think you should be looking at 1 to 1 or 1 to 2 before you, or 1 to 2 before you move it to your move your stop loss down. Because if it goes to 1 to 2, usually, quite frequently at 1 to 2, especially with the market volatility nowadays, I would definitely say close out the trade already. Because at 1 to 2, it's more likely it would have hit a key support level or key resistance level. I would close out the trade because you would always anticipate a bounce, a quite significant bounce, especially nowadays. So at which level would I start thinking about moving stop loss in profit? I would say that once it clears an interim level. Okay, so again, I'll show you here. Oh, I can just do that. All right, so for example, in this case, right, once we sell here, once it breaks, so for example, it goes past that point, right, because we have an interim level here. Once it comes down to that point, I would move my initial stop loss down to break even, right? But then with another level there, I'm trying to draw as straight a line as I can. Okay, then I would move that. I'll sit there, wait for it to break, and once it breaks down this point, then I'll move. So that was the first stop loss. I'll move the second one here. Then the third one, I'll move it just beyond that point. Okay, then once it breaks lower without any points of reference, then I'll move it based on my moving average there, or the PSAR. Okay, yeah, I always advise everyone, it's not profit until you close your trade and secured it. So make sure you do that. Okay, super trend. Okay, look for that. Look for super trend. Okay, so moving on, as we went through the chandelier and the ATR, effectiveness of the trailing stop loss when playing a breakout. What's a breakout, right? A breakout is usually a high volatility event. It could be a breakout from a consolidation, right? It could be a breakout from consolidation. So we're looking at when price goes, for example, up, and then it bounces around for a while. So you have a consolidation, a bit of a horizontal consolidation. We're looking for that breakout either towards upside or breakout towards the downside. All right. And we all know that at some level, once it breaks out of consolidation, we're likely to see a very big move, either up, or if it goes down, a big move towards the downside, right? Because it's been consolidating. A compression of price over a period of time is likely to lead to a big, somewhat explosive move in one direction. But like I was sharing with you guys before, I think I was sharing with you guys before, is that whenever you see price spike up, right, what could happen next, or what's likely to happen next? We could almost always see a reversal that's almost twice as quick. Sorry. So price spiking up, we could see that reversal almost twice as quick for several reasons. One, you're all familiar with the Nike tick, right? We see the big push above the original price, and then it reverses back down again. Okay, that could be a small or big reversal. Or two, in a news event, and I'll show you an example of that. In a news event, I can see a change of sentiment, right? A almost immediate change of sentiment as the news gets released, price spiking down and then quickly reversing back up, or spiking up and then quickly reversing back down. So it's a good thing that you first, well, you always want to remember, apply a stop loss. I've lost my mouse. Okay, apply a stop loss to help you manage first. This is the first thing you want to do, and then the second thing you want to do. Okay, the first thing, as you enter, let's say that price was sitting there and then it starts breaking down, you want to sell. You want to sell there. You want to have your stop loss above, because in the worst case, if you're wrong, it goes up against you, you have managed your risk, you have protected your capital, right? You have your take profit way down there. Then as price goes down, you want to move your trailing stop lower to help you protect your profit, right? So this is your stop loss. This is the first one. As you enter a trade, or before you enter a trade with a pending order, you want to have your fixed levels so that you protect capital. And then the second one, as it moves down, you want to have your trailing stop manually placed or automatically placed to help you protect your profit. Very important. As recently as last Thursday, this was crucial. Oops, okay. Why I say that? Anyone remembers what happened on the 3rd of November at 2 a.m. GMT +8? This is the dollar index chart. We saw it go from about 111.40, pretty much, this is a 5-minute time frame, pretty much straight down at 2 a.m. You got it, BL, right? Straight down in 5 minutes from 11140 to 11072, right? And then it bounced around and it went back up again. Okay, so this would be an example here that first, trading this news, we pretty much anticipated this kind of volatility. Why I say that is because what happened here at on the 3rd of November with the Federal Reserve, they increased interest rates by 75 basis points. Okay, they increased interest rates by 75 basis points, and that rate increase caught no one by surprise. Didn't surprise anyone. It was telegraphed way before. Everyone expected it already. So as it happened, we saw price shoot down. There were other reasons. A line in the statement that says that the Federal Reserve could adjust the policy depending on economic data, but it was a bit of a priced-in scenario. That's why we saw it drop down. So what you could have done here on the news event, you saw that dropping before the news, you could have a sell entry, a pending sell at that point. Pending sell. Okay, stop loss could be above that resistance level or just above this interim resistance level there. So it'll be a stop loss. Take profit if you were being very disciplined. Your take profit will be just before this support level at 110.72. So your take profit should have been here. Why I've drawn it right away from where the candle is, because I do know you're all retail traders. What you're likely to have done is that you might have not even had a take profit level. You would have thought, you know, if I sold here, it's going to drop all the way, going to make a lot of money. But, you know, typically you should have your take profit there. So for this example, let's say that you didn't have a take profit, right? Let's say that you have your take profit very far away and then price drops. Two things you could have done. One, apply the automatic trailing stop, which I'm pretty sure you wouldn't have the time to do it because this was on a 5-minute time frame. As it drops, you know, you wouldn't be thinking about that. What you could have done is move your stop loss down, right? You move it down according to either the moving average here or the PSAR. So you move it down, and then what you could, so I have my support level there, I would have taken profit, or you can move it down and then just move it according to that moving average there. Okay, so what would have happened is that as it breaks lower, you could have your moving average or your stop loss right there. Next 5 minutes at 2:30 a.m., it shoots up, closes you out. Okay, so that would be your trade. You would have missed out on this amount of profit, but it closed you out to prevent you from losing money if you just had your stop loss right at the top there. Okay, to prevent you from losing money, and if you didn't have your stop loss, to prevent you from losing your entire account when it shoots all the way back up. Or you can part 1 to MA and part 2. Part 1 and what do you mean by part 1 and part 2? My impression in those cases in that night is doomed if the stop loss is tight, no matter if I got the direction of part 1 of your trade to MA1. And yeah, so you know that's the second last slide I was going to share with you, is that, you know, as you apply your trailing stop loss, I'll repeat it later again, but as you apply your trailing stop loss, you can also consider, you don't have to close out the whole trade. You can close out parts of your trade. Okay, so you can put a trailing stop to close out part of the trade. You can't put multiple trailing stops, don't get me wrong, but you can let one part run, close out one part, and then if it goes up, hits the next one, you can close out your trade. Okay, my impression in those cases in that night, that trade is doomed if the stop loss is tight, no matter if I got the direction right. Yeah, so again, like I was telling you guys, you know, you want to have your stop loss at a reasonable level. You don't want it too tight, okay? Because let's say, for example, so that was the sell down scenario. Okay, that's a sell down scenario. I'll tell you now that at 2:30 a.m., why did the dollar index shoot straight back up beyond what was the original level? Is because at 2:30, about 2:35, exactly where that candle starts, Chair Powell came out and said that the terminal rates or the final rates is likely to be higher than previously expected, right? So markets straight away considered that interest rates in the US could be a lot higher than that 5% they initially expected. Current estimates, they think that it might even get to 6%. Okay, and so because of that, we saw the dollar strengthen. So let's say that in this scenario, you heard the news, and I actually caught that news event. I was watching the press conference, managed to catch that trade as it shot up. So I didn't catch that 5 minutes. I caught it after that 5 minutes on the currency pairs. So we saw it pushing, the dollar index pushing towards the upside. what you could be doing here, let's say that as it bounces off or breaks through that resistance level, you could be looking to buy. Stop loss again below that support level, take profit up there. Okay, take profit here, stop loss there. Okay, so what happens here is that, like Zoran was just saying, you know, if you have your stop loss, manual or automatic, too near, what's likely to happen is that as price goes up, the next moment, if you have it too near, let's say you have it within a couple of pips or 15 pips, it goes up, the next moment it turns back down slightly, you get stopped out, right? So you could get stopped out there, or if it turns back down from about 11150 to 11125, you get stopped out. So you don't want to have it too near. You want to move that away again, right? So you want to have it have a reason why you have it as it goes up, as it bounces off a support trend MA support level. You could have your stop loss moved up, right? You could follow the PSAR as well. For me, I look at the support and resistance levels to trade it towards upside, right? And if you see now here, based on this, it does come back up. If you just kept moving your stop loss up, you would have stopped out based on the moving average or the PSAR right at the top there as well. Okay, so that's an example of, again, coming back to this, why you need to have your stop loss when playing a breakout. Okay, high volatility events, you don't want to have your stop loss too near in the first place, but you also don't want to be caught with the emotions of price. So you want to have a fixed level, you want to have a mechanical level or visual level of where you're going to apply that stop loss to. Okay, removing, or not removing, but minimizing that emotional aspects of applying that stop loss. Okay, another example here, this is very recent, this is just right now before the session. I think this is the, what was this? This is the pound yen. Okay, this is pound yen. As it turned down, you can see that, you know, rejection of that level. You could have sold. So if you saw a rejection of that level, you sold. Stop loss at the top. Take profit might be there. So like Desiree was saying, would you get out of the trade? Yes, this would have come down, right? As it breaks below that MA, stays below that MA, you could have moved your stop loss lower, securing some profits towards break even. Could have come down here, take profit there, right? Because this is take profit. Let's say you didn't put your take profit there. Let's say instead you had your take profit right at the bottom, right? You had your take profit right there at the bottom, at the next support level of 165.76. Then you see price move down. You'd move your stop loss either following the moving average, right, as it comes down. So you might get stopped out. So you don't put it too near, right? You might move it down above the moving average as it breaks that support level. It's another level to help you protect your stop loss again. As it comes down, as it turns down from this point, you move your stop loss again. Right? As it comes down from this point, you move your stop loss. So you can see a bit of a test and turn down, you move your stop loss again. What happens here is, let's say that you got super greedy, and as it was turning down, you started expecting price to break this support and turn all the way down. Price turns back up, you would have closed out there, you have secured your trade towards the downside. Based on the stop loss being triggered, or trading stop loss being triggered, your profits would have been secured. Okay, another example, so this is a good one here. Another example is when we see that bounce back up. Okay, that bounce back up, bouncing off a support level. I love this kind of trades, right? You'll be looking to buy from that point, stop loss below this level, take profit, you have a resistance level already, so your take profit will be towards that point there. Okay, so what happens here is that as it moves up, this is on H4 time frame, as it moves up, I would have moved my stop loss up. Right, you can see it test. I would have moved it to about that level there based on the moving average. Fortunately, in this case, it hit my take profit level, and then instead of coming back down to hit my stop loss on a trading stop. Okay, so you want to have a combination. You want to have a combination. You want to apply your stop loss, your trailing stop loss levels to protect your profit, right? To protect your profit, but also you don't want to take it as you. Wait, how do I say this? You don't want to use your stop. You don't use your trailing stop too often. Okay, I would so much prefer the trade move up and hit a take profit level, because no matter what, wherever you put your stop loss, you're always going to be giving away, right? So we had a buy entry there, we had our trailing stop loss there, right? We have our take profit. Let's say we got greedy and put our take profit there. No matter, whenever it hits your trailing stop, you're always still giving away a whole bunch of potentially good profit that you could have closed out on. Okay, so I'm always, this shouldn't, having a trailing stop should never give you that excuse to be greedy, not have a take profit level. Let's see how far I can run. I'll just move my trailing stop, because what could happen is that you might have not moved your trailing stop, or if you kept it too tight, you might have fluctuated, stopped you out, and then pushed on higher, or you just end up giving away a lot of potential profits as well. All right, so far so good. You guys catching everything all right? Fantastic. So Fabio says the best way to close partial at TP and then use trailing stop. I would actually put a trailing stop based on partial, and then after that use run the rest to take profit. Yeah, but I would still rather it go up straight and hit my take profit level. Okay, so have you guys got the answer? We've gone through towards the end. We're in the last couple of slides. Right at the start, I told you, think about this. What's the best trailing stop to use? What's your answer? What do you think? Which is the best trailing stop loss? Put it in, let me know. Isn't there also a difference between the trending and ranging markets in terms of which method to use? Yes. Jan has a bit of an answer there. Kelvin with a fantastic answer of TP. Fabio says support and resistance. What about everyone else? Which is the best trailing stop loss? Chandelier from Alan. Best performance is the PSAR. Yep. Who else? Come on, Desiree, Simon, Bob. What do you guys think? PSAR for if you're in front of your computer. If not, support resistance. Depends on the market. Zaba with somewhat of an answer there. Chandelier on Kelvin. Anyone else? Calling once. Calling twice. Neil. PSAR with support resistance. Support resistance. Take your profit and be contented. Make sure that it's a good reason why you're going to get off a trade. It doesn't always have to be take a profit. You want to have a good reason for that profit as well. Position to make your buy or sell reason wrong. Good stuff. Okay, so very good answers, and I hope you're watching and you realize that everyone has different answers, right? Everyone has different answers. It could be whether you're watching the market or not. It could be whether you're going to sleep or support resistance levels. But I like the answer in particular from Jan. Depends on the trending or ranging market, and also the answer from Zabar, which says depends on the market. Because which is the best trading stop loss? I'll tell you that there is no best trailing stop loss. That was a bit of a trick answer, a bit of a trick question there. There's no best trailing stop loss. You guys have indicated so many different ideas of applying your trailing stop, right? And I'm super happy that you caught on to, different levels, different ideas of stop loss or trailing stop loss levels. Ultimately, it depends on your strategy, right? Depends on your strategy, whether you close partial or not, whether you want to. Okay, we might do I'll feedback and do a session on that, right? But what you want to consider, like Jan and Zaba were saying, what's the market volatility? Is it trending? So is it moving in a trending scenario? That's a horrible trend, but is it trending in a scenario, or is it in a range, right? That's going to determine the different trailing stop loss you're going to use, because if you have it in a range, then your support and resistance levels might not work very well as a trailing stop, right? But if it's trending strongly, could work very well based on support resistance levels. Trending, you might use PSAR, let's say, for example, right? So depends on your strategy, depends on the time frame that you're entering a trade on. I've shown you examples on the, from February to March. I've shown you on H4 time frames, 5-minute time frames. It depends on the time frame of your trade, which is the objective of your trade, right? Is it a swing? Oops, swing. I can't write with a mouse, right? Or a scalp, right? Different objective of your trade. Are you going for that quick one, right? If you're going for a quick trade, then you might have a automatic stop put in, or you might have a fixed levels, but you're quick to close out your trade. If you're looking at a swing trade because it's trending nicely, then you would have different indicators, PSAR, moving average levels, the chandelier, to help you protect your trade because it's longer term, right? And also risk management levels, right? So you'll consider your risk management. How much of a what's position are you in, right? What's the position you're in? What kind of trade size is it? Because I know that most of you, based on your account size, I don't know what your account sizes are, but based on the average account sizes, you won't be able to enter too many trades at a time. So as you have your trailing stop, you want to be able to manage your risk, right? Because if you have one trade running, you might not be able to enter another or two other trades. So you want to manage your risk in that aspect as well. Okay, and risk management is also where we start thinking about closing out partial. I can't write. Okay, partial closure of your positions, just so that you can, based on partial trailing stop loss. 0.1 per 100 equity. That's a bit high, I think. Yeah, this is still a little bit high, I think. Okay, so you gotta consider your risk management as well. Okay, one more last one is, this is the euro dollar. I haven't checked the charts yet. I don't know what's happening on the charts right now. But when I was doing this today, right before this session, the euro dollar was turning down from that parity level, right? Was turning down from that parity level. I was considering whether, if I was watching this, if price, let me try and draw this candle. If it was turning down a little bit more like that, okay, then I'll be thinking that it's likely to reverse towards the downside. I would say sell there, stop loss above. Oops, that's not sell. Sell there, stop loss above. I think I fired out into the room as well for you guys. So check that. I had my take profit towards that level there. Okay, so for me is that if I sold there, as price drops, once it goes past this 0.9950 level, then I'll move my stop loss down towards break even, right? Because once it breaks below that point, I'll move it to break even. And then as it goes down further, I'm sure moving average will be turning down as well. maybe it comes down to the next level here, then I'll move my stop loss down again. Okay, so that would be how I look at the euro dollar possible reversal on the euro dollar, trading it down, moving that stop loss down, either based on the support levels. I'm anticipating that the moving average would turn down as well, so moving average levels towards the downside. Okay, so another example here, as we see it break that, so you can see based on this candle here, as it breaks that level, if you're looking to sell there, stop loss would be above that resistance level, take profit would be down there. In this case, it fell straight away. Even if you move your stop loss lower, it wouldn't have mattered that much because it went straight down and hit your take profit. Okay, so with that, 1 point per 100, 527. That's quite a number of trades, Bob. Quite a big amount. So just be careful with that. Risk management, also not too many trades against one currency for sure. Remember currency correlation. So you don't want to be entering too many trades on the same correlation, because you get one wrong, you would get pretty much all wrong. Okay, so with that, I hope you had a good session. Let me know. I hope you learned a lot about trailing stop losses. Make sure you apply it to your trading strategy. Let me know what you apply. Let me know what works for you. And if it doesn't work for you, let me know. I can help you tweak it a little bit, and we'll find something that works for you. With that said, trade well, trade safe. We've got big news coming up. Take care now. See ya.